Good morning, everyone, and welcome to the Sirius Report. My name is Ken Shorjan. I'm here with London Paul. And Paul, on January 1st, we had Ukraine shut off Russian gas to Europe. Now, this isn't the only, of course, pipeline and energy routes that have been stymied into Europe since the beginning of the SMO, but it is an important one, especially for Eastern Europe. With this being said, there's a lot of interesting things at play in regards to energy, whether it's from US LNG, from Qatar LNG, and what it's doing affecting the European economies. Paul, as always, I want to thank you for being a part of this discussion. And on the basis of shutting off the pipeline from Ukraine into Europe, what are some of the ramifications you are seeing early on here?
Well, firstly, thanks, Ken, as well for joining today. Yeah, it's extremely important this because again, you have to get an understanding of what's really going on as opposed to I mean, there is clearly serious ramifications. We're not trivializing it, but also just to get an understanding currently of European gas reserves, what that means in the short term through the rest of the so-called heating season. But also, as Ken rightly points out, the effectively that the gas or the remaining gas transit going through Ukraine was shut off on December the 31st or on the stroke of midnight on the 1st of January. And this relates to Russian gas transit. That was because the contract that was signed in 2019 between Gazprom and Ukraine's Naftogaz expired. Therefore, Russia neither had the legal nor the technical capacity to continue pumping gas into this pipeline. Why was it important? It supplied Moldova and 4 EU countries: Slovakia, Austria, Italy, and the Czech Republic. That no longer is in place. Now, immediately, the European Commission got rather angry and upset about this, even though, of course, the statement that was coming out of the Western media is, oh, Europe's had their energy cut off due to Russia, not due to the fact of Ukraine refusing to renegotiate a contract, which the transit fees would have been worth $1 billion equivalent to them. So they lose out on $1 billion. But when you get given massive handouts by the Americans, why would you care? But the issue is the European Union came out and was supposed to have talks which were scheduled for January the 7th. Those talks failed to come about because the Ukrainian delegation decided not to participate. The Slovakians came out and stated this. Their Prime Minister Fico said that consultations on this halted gas transit through Ukraine to Slovakia were supposed to take place in Brussels on that date. Considering, of course, if Ukraine doesn't bother turning up, what's the point in having a meeting? But the European Commission wants to continue to push for another date when that meeting would take place. The argument is Ukraine going to turn up at any subsequent ones? Now, interestingly, there was a statement that came out from the Ukrainians, and this shows how absolutely ridiculous the situation's become, that they might consider switching the gas back on, and obviously then making supplies again to Moldova and Slovakia, Austria, Italy, and the Czech Republic, but only on the basis that it wasn't called Russian gas. I mean, this is like one of those situations where it's the not QE. I mean, what are we going to call it? The European gas, the Moldovan gas, the former Soviet Union gas. I mean, it's absolutely idiotic, but that's how pathetic the situation is. But Europe knew this was coming. I mean, I think they thought there was some kind of bravado going on from the Ukrainians, or they thought somehow Russia would continue to pump this. Well, Russia's not going to continue to pump it due to technical issues, because if Ukraine switches off transit across Ukraine, what's Russia going to do? You can't supply the gas. this is fairly and squarely rests on the shoulders of Ukraine. Now, of course, the problem with not getting gas is that's going to impact the obviously the existing storage, and we'll talk about storage shortly, where and that's unquantifiable to the extent that that's going to impact those European countries and Europe in general, because they're now going to have to draw on those reserves more than they would have, simply on the basis that none of that's getting replenished with these additional supplies that used to come through via Ukraine. So this is a serious problem. It isn't a serious problem immediately, but it's a serious problem in the medium long term. It might not potentially impact them at this point in time, but it will most certainly do so when we get to winter next year if this isn't resolved, never mind the ongoing issues of Nord Stream. And we're going to talk about Nord Stream later in respect of the AfD party in Germany. So that, in a broad sense, is a huge problem at the moment. And I'll give way to you, Ken, then, and then I'll talk about the storage facilities in Europe, because there's extremely interesting data come out from that, which highlights why we are on the cusp of some major problems going forward. And at the moment, there's no resolution to deal with that problem.
Absolutely. Yeah. Obviously, you mentioned Nord Stream, and the Yamal pipeline to Poland was shut down after the SMO started. From 2021 to 2023, gas imports have fallen from 40% down to 8%, and that doesn't include what's been shut down going into Moldova and from Ukraine on January 1st. And one of the more interesting things is, obviously, Slovakia has been very vocal in recent days regarding the need for energy, the need for natural gas, oil, etc. And these are nations that can have an extraordinary effect on what the NATO and the European Union does in regards to giving support to Ukraine, which to me was one of the most ludicrous things, because you figure that Zelensky needs to cultivate Europe, especially NATO countries or those in Eastern Europe, which can, with one single vote, cut off any future funding, any future arms to Ukraine, any future support. So you would want to cultivate that, and instead they're insulting these leaders, insulting these nations, and expecting that, well, we know we're a proxy for you, so you're going to do whatever you have to do, and we can get away with doing whatever we want, even if it's just tit for tat type of things. So it's a fascinating thing, and more it's going to affect, already Germany is probably into its third year now in recession. Things are getting extraordinarily worse. And we moved into a La Nina, so that the winter has been much harsher than projected so far into Europe. And from what I saw, leading into what you're going to talk about, what's in storage, I think they've already spent 40% of their storage or more just having to deal with the colder weather that's succumbed in the last 2 to 3 months.
Let's highlight this very specifically. At the moment, gas reserves in underground storage facilities in Europe have now fallen below 70%, only just, but have. And the withdrawal rate since the beginning of the heating season, and we'll talk about the heating season started earlier in 2024, is about 30% higher than the average for the past 5 years. Now, we also have to temper that with the fact that the amount of gas in these underground storage facilities is the fourth highest in history, and it's significantly higher than in the years where the reserve situation was deemed to be critical. Now, that doesn't mean there isn't a problem, and we'll explain why. Because the total volume of fuel in this UGS for the beginning of January was 77 billion cubic meters. Now, if you look back to very serious problematic years previously in 2018 and 2022, when reserves in storage facilities at the end of the heating season in spring fell to critical levels below 18% in 2018 and 26% in 2022. Now, bearing in mind, of course, that a lot of that was not a problem because they had access to Nord Stream, they had access to Yamal, they had access to, of course, energy or gas transit across Ukraine. So, given currently these UGS facilities just below 70%, that is 6% lower than the average for the previous 5 years. But obviously, it's about 7% higher than 2018 and 15% higher than in 2022. Now, if you go back, though, to January 2024, the reserves were 16% higher than they are now. And if you go back to the first few days of this year in 2025, the rate of gas withdrawal from storage facilities is at the level of late December and is the highest for that month in 4 years. There was cold weather across Europe, but it seems to be in a colder winter. I can say that from experience. The heating season in Europe actually started on the 29th of October. That's 10 days later than the year before that. And since then, EU countries have withdrawn more than 30 billion cubic meters of gas from the storage facilities. Now, if you look at the last season of gas withdrawal from the European UGS facilities, which ended on March the 31st, they had 58.4% of reserves remaining in them. Now, here's the problem. We don't know what's going to happen for the rest of winter. But if things continue as the way they are, this figure for 2025 is going to be considerably lower than that, than this 58.4% or so for 2024, because of the current rate of decline on a daily basis. By the time we get to spring, when the heating season ends, that could be significantly less than 30%. Now, if that happens, then, and they don't have access to energy supplies in the future, that is going to be an enormous problem. And with pipeline gas, you sign contracts, it's very straightforward. You get delivery, everyone's happy. With LNG, it tends to be whoever's prepared to pay the most gets it in a market where supply is huge and demand is very strong, supply less so. So that therefore feeds into all these concerns about inflationary pressure. And Europe could find itself in serious trouble come the heating season in 2025. It's fortuitously got through the last few years, not least because winters tend to be milder. But this year, we've had a lot of cold weather already. In the next 2 or 3 weeks, it's projected to be cold, or very cold by the standards where we're living currently. I mean, it's hovering around 2 or 3 degrees above freezing. That's very cold. So we'll see what happens, but you can get an understanding why, on the one sense, people can be lulled into some false sense of security about gas reserves, but in reality, having made that assessment of this data, it is a significant problem. And one other thing we need to factor into this, which could throw an enormous spanner in the works, is Qatar is considering halting gas supplies to the EU. Now, this is in response to the EU directive that was adopted back in May of last year that imposed fines of about 5% of global turnover on corporations who apparently violated environmental standards, whatever they are, human rights, or CO2 emission criteria. So Qatar's raised the prospect of cutting off all gas supplies to Europe in totality. The Qatari Energy Ministry came out and said, look, that if it was facing such fine, meaning losing 5% of revenues, their attitude is we'd rather stop selling to Europe altogether. Why? because we'll find someone else to sell the gas to. Why is this important for Europe? Because Qatar exports about 25% of its gas to Europe. Who's going to be the beneficiary instead? Asian markets. And for the EU, in the absence of Russian gas and Ukraine switching off the last route that goes obviously via Ukraine itself, that shift could be a massive problem, because here's the thing. If Qatar sells it to the Asian markets are going to go, well, we'll sign long-term contracts with you, no problem, 10, 20 years. They're very keen to do that. Western markets aren't, for some bizarre reason, because that was part of the problem Germany had in securing supplies from Qatar. But if Qatar shuts that off, Europe is in for a world of pain. Never mind all the economic, financial problems that it experiences. And this is where it starts to get extremely ugly, and is very likely to be the case unless Europe backs off and gives Qatar a veto. And it gives Qatar a veto on this 5%. Then he'll have to do it for everyone else, in which case they're going to have to back away from what was frankly an idiotic directive anyway.
Yeah, one of the more fascinating things too is there was this hope by Europe that Syria, what was going on in Syria once they got rid of Assad, would facilitate the finishing of the pipeline. I think it is one portion of Turk Stream through Syria into Eastern Europe. And well, that's sort of up in the air because they really don't know how stable the government is in regards to, providing stability to finish this pipeline. Turkey is still in conflict mode. The United States certainly isn't going to help. And, one avenue for Europe to be able to hopefully have a replacement for Ukraine or Russian gas, etc., is completely up in the air, and it's going to be years before this thing is completed, if it's completed. Then, of course, as you mentioned, the important thing, LNG. Take a look at the U.S. The U.S. has one primary facility that has limited productivity and capacity, and they have to ship it or they have to send it by ship, which takes time, and that's going to be consumed pretty much by the highest bidder between France, Germany, and what's going on in Western Europe. Eastern Europe is going to get whatever it can. Hungary and Slovakia are getting theirs from the Turk Stream pipeline. They're going to look to themselves first before forwarding it into Western Europe. So Europe is suddenly going to become not a homogeneous sharing of energy resources. It's going to be, hey, you know what? I'm going to get mine, and if there's any left, then you can trickle down from there. This is going to cause obviously prices to skyrocket, and Europe is going to be the big loser because they don't have anything to offer, since especially they've cut off their nose to spite their face in making Russia, an enemy that isn't going to want to deal with Europe when it comes to energy for quite a while.
No, that's true. Point worth making, this whole thing with the SAD and energy pipelines. No pipelines at all exist. There's no agreement. It was some vague discussion that came about in 2007. We've discussed this before. Qatar's totally changed its energy profile, and the US doesn't want Qatar selling any more energy to the Europeans because the Americans want to dominate the market. So this pipeline has never got off the ground. No one's even discussed anything. No contracts were ever signed. It's partly true, but partly another myth that has gained too much traction. I'm not saying it can't happen in the future, but the US will be extremely adverse to this because they don't want Qatar selling more energy to the Europeans. They want to sell the energy. So why would they sanction an energy pipeline put in place that would sell gas a lot cheaper anyway, because pipeline gas is a lot cheaper than LNG. So it's not in the US interest. And frankly, Qatar doesn't need the grief from the United States because it can sell it to the Asians instead of Europe anyway. So that's just one point. But another point worth making, I mean, and this ties in with some economic data, which is worth mentioning briefly. And that's German inflation. We know Germany's economy is cratering, it's collapsing, businesses going to the wall. But look at its recent inflation data that came out on the 6th of January. Now, there are two measurements. There's CPI, which is the official measure of inflation, and then there's HICP, which is this international comparisons of inflation rates, which is made between member states within the European Union. Now, if we look at the HICP month over month for December, it came in at 0.7%. It was expected to be 0.5%, and previously it was minus 0.7%. So it's now gone, it's swung basically 1.4% from being deflationary to inflationary. With regards to CPI for the month of December, same thing, it came in at 0.4%. It was expected to be 0.3%, previously minus 0.2%. So again, a 0.6% swing. And we don't need to go on and on, but we saw similar figures for year over year for HICP and year over year for CPI. Both increased and quite significantly than on previous estimates. Now, you would ask yourself what's going on. This is classic stagflation that we're seeing in Germany. And what's the principal, or one of the principal causes of this rise is energy or energy costs, because energy is the lifeblood of everything. And anything Germany produces is getting more and more expensive. We know that inflation's only going to continue to increase across Europe in a broader sense. There's already evidence to support that coming out of the Netherlands. And one of the big line items that's causing inflation to increase is energy costs. So this is a byproduct of this stupid attitude towards energy, and why even when an economy is cratering like Germany, it has huge problems with inflation. I mean, and it's going to, if it continues and inflation continues on this basis, we're going to get stagflation on steroids. I'm not saying it will definitely happen, but it would be stagflation on steroids. This is not hyperinflation, which, as Ken and I have discussed previously, is a confidence event. I'm not saying in the future that can't happen, but let's not confuse high inflation as meaning hyperinflation. It's very important to distinguish between the two. And just a final point I want to make, which might seem as though it doesn't relate to this, but it does, is the UK gilt markets. Again, this is a lack of confidence in the long end. It's indicative of total confusion about government policy, about inflation. And we recall when Liz Truss tried to come out with a mini budget, it was rounded on, it was very obvious. The markets were worked in a way it caused Truss to end up being the UK Prime Minister for next to no time. It's worth noting the following, though. The 10-year, when Truss effectively had to resign, was 4.38%. Today, 4.65%. The 30-year, when Truss left, 4.85%, now 5.2%. So the gilt markets are even weaker and more of a problem than they were when Truss eventually obviously resigned. And it shows that the UK gilt markets are in serious trouble once again. And how long is it going to be before the Bank of England have to react? Now, again, this relates to inflation, even though the UK economy is cratering also. I mean, we had, hundreds of businesses in the UK going to the wall, and this is getting worse every year, even since the pandemic, when a lot of businesses were shuttered on that basis. But this is primarily inflationary related. And the question is, are we going to experience the same problems in European bond markets on that basis? The answer in the longer term is likely to be yes. But this is just indicative of what happens when you make idiotic ideological decisions you can pay a very serious price, including blowing up your bond markets in the process.
Yeah, and the bottom line is, one last data point I want to look at here is going into the end of the year, the number of consumer bankruptcies in Germany increased by 8.5% to just over 72,000. In 2025, that's expected to be even more. Is it any wonder that the decisions made, whether it's the Green New Deal, the decision to focus on Ukraine and spending so much money on this proxy war, while at the same time implementing other really bad economic or financial and economic policies, that we're seeing across the board in Europe a divestiture of confidence in governments and a move towards the extreme. And this goes back to something I've talked about for years. During a populist frequency era, which is usually the second and third decades of every century, you have a change and a continuous change of government as the people want something more, and things get more extreme the more and more that the status quo or the governments refuse to do, to provide what the people are wanting, the populists are wanting. And as they say, they're calling them extreme right, trying to equate the Reform Party, the AfD, what's going on with Marie Le Pen, obviously the Trump movement in MAGA. They're trying to equate that with the extreme right-wing extremism of the 1920s, 1930s in Germany and Italy. But the reality is that happens when you do not accommodate the people, and instead you push for these insane policies, ideological policies that we've seen over the past 20 years, or even going back to the time of the great financial crisis. Anyway,
just a quick point,
Yeah,
though,
go ahead.
Dan. We have to emphasize this. We're not remotely suggesting that these parties are like those parties were in the 1920s and 30s. Absolutely not. They just equate that to try and scare the electorate off from voting for these parties. And equally, I'm very apathetic towards political parties, as everybody knows. This isn't me suggesting anyone votes for anyone. We're just trying to highlight a very important point that happens in history. But obviously, this is not going to have the same outcome as what happened in the 20s and 30s, clearly.
Yeah, and that's why I use the word equate, and I'm glad you emphasized it. And in reality, history rhymes much more than it repeats itself verbatim. Anyway, Paul, were there anything else you wanted to add today?
No, I think that's a good point to stop.
Absolutely. Thank you, as always, for your insight and for being a part of this discussion.
Yes, and likewise.
And to everybody here at the Sirius Report community, thank you for all of your support. Don't forget to like, share, subscribe, comment. Send this out to anybody you think would be important. And until the next time we get together, have a great day.